So this is my daily key levels. So I went back to yesterday's candle. So today on this chart, today hasn't happened yet. I go through the daily key levels. I look back at and see what happened at these levels, why I had these levels marked. So you'll see here like 819, 819 gap, 3.8 through 314 resistance and support, 425 through 428 support and resistance. Now here on this level, you'll see the 4164. It got support from the 24th of February through March 14th, and then resistance from the end of May, early June, and same thing here. I just like to write down these levels. All right, and so you'll see down here, I marked this because 826 Friday, that's where it ended, and got support right there. So this is your big level of consolidation. All right. But what happened was this actually on Friday confirmed below that. And one, it not only confirmed with rising volume, it confirmed and went through completely the 9, the 21, and the 50 EMA. MACD is turning red. The TTM turned red, obviously up top down here. The EMA's crossed, but it also turned on red. So you think potentially it's going into a downtrend, or at least it broke out of this level of consolidation here. There'll be a few different levels that you need to look for going into the day. All right. One major thing that you would need to see here is because it ended on 40.57, these areas right here, this 40.80, that's a huge level. You'll see, obviously, for it to get back up into the 4100s. If it went above 40.80, then I would potentially take calls. But at that point, still, that's a big level that needs to get confirmation on a larger time frame for me to feel comfortable taking calls. When you get down onto the daily or the 5-minute chart, which is usually what I play on, the Golden Goose Fibonacci levels are a little bit more on the micro. I find those more on the hourly to 4 hour. This is where I really got into some plays. This area right here. Now, why? The psychology and psychology behind volume and things like that is very important to me to make a trade. So, one, this right here, this candle, biggest candle in terms of volume, but it relatively stayed the same in terms of price. Not a huge amount of movement for a 5-minute candle on SPX. So what that tells me is that when you're getting increasing volume and same price, that means it's actually bearish. When this candle closed like that, I got into 440 puts and 445 puts. I was, as long as it was in a downtrend, I got into this because I did like that this down here, this candle, was rising volume, as well as staying around relatively the same price, and this was rising volume on lowering price, which means it doesn't have a lot of confirmation. And so when I added these, it immediately got rejected. And what I liked about this candle right here was that big body, obviously, but increasing volume. Increasing volume is huge. Rode that out and scaled out. I scaled out throughout and left a 440 runner, which ended up hitting for $1,400. But this was a half-hour move. So I held it for 37 minutes, and the other ones I held for 25 minutes. So this was the play, but I also had my target. So I started scaling out at this when we hit the 433. So these are my plays for today. Obviously, you see these, the open time, the close time, the amount, but this was that right here, the 440s and 445s, where I got into them at that rejection candle. And here is what it looked like during the day that I called. And so you'll see this is where the EMAs were. It was getting rejected through here, lowering volume, rising price. Here, biggest volume candle of the day, but stayed relatively the same. And that's where I added. Lowering volume, rising price, rejected at that golden goose level, and ended up banking out. Let me know if you have any questions. I'm down to do some one-on-ones. I'm doing that as well. But stay sexy, all right? Have a good one.